You've got a roadmap and you've got product velocity. And now your legal team is saying, we should probably get a license. Maybe from MAS in Singapore or under MiCA in the EU or even through VARA in Dubai. But here's what I see all the time. Founders diving headfirst into the wrong regulatory regime, chasing the wrong license class, or going in with completely the wrong idea of what getting licensed actually means. Fast forward 6 months, they've missed key milestones, racked up a pile of compliance debt, and their teams burning out from all the friction. And look, with the global fintech market expected to hit over $350 billion by 2025, more founders than ever are jumping into this space. But too many are making the same mistakes, and it's costing them time, money, and credibility. In this video, here's what we're going to unpack together. Why most founders pick the wrong licensing path, what regulators are really expecting, and how you can avoid dead ends before your legal spend starts bleeding your runway. The founder trap. It usually starts with good intentions. We'll launch in Singapore, they're crypto-friendly. We'll get that license in 6 months. But here's the thing. They think it's just a form, a checklist. But regulators, they're not just ticking boxes anymore. They're digging into how complex your product is, how your internal structure works, and how you're managing risk, whether your team actually knows what they're doing. Most founders aren't careless. They're just misaligned. They're being sold a process before they've even figured out a strategy. I had a founder tell me, our lawyer said we'll be fine under MiCA, but we went full speed ahead on the MVP. But 3 months in, they've learned their product didn't even qualify for the simplified regime. That kicked off a full licensing process, one they weren't even remotely ready for. Licensing isn't about what's technically allowed. It's about what's strategically viable for where you are right now in your build. License does not equal paperwork. Here's the shift I want you to make in your thinking. Licensing isn't just paperwork. It's your second product, the one regulators will use to test your credibility, like a second code base you have to ship. And just like any product, you need a plan, a clear build, a narrative around how it's designed, a realistic timeline, QA, implementation support, all of it. And the expectations? They're different across markets. MAS in Singapore expects real operational control. No shell companies, no smoke and mirrors. MiCA in the EU is extremely specific. It applies a strict classification system based on what exactly you're doing. And VARA in Dubai? They move fast, but they want to see governance in place before you even launch. But here's the real kicker. Internal readiness. Sure, you might have lawyers on retainer, but if your team can't even run AML reviews, manage a suspicious activity log, or align your product with risk disclosures, you're not ready. Paper doesn't get you licensed. Competency does. Regulators today expect fintechs to come prepared, with strong anti-money laundering and KYC protocols, solid data security, real consumer protection policies, good governance, and clear vendor oversight. If you don't have that, you're either racking up fines or setting yourself up to get shut down. The 3-part readiness flow. So how do you avoid all this? There's a 3-part flow I use with teams to avoid wasting time. First, anchor your jurisdiction. Where are you actually regulated? It's not where you're incorporated. It might be where your users live, where your money moves, or where your investors are. Take Kenya, for example. It takes up to 2 years to get a PSP license because of central bank bottlenecks. That's why Onafriq partners with providers like M-Pesa instead of going it alone. They buy themselves time. Second, get crystal clear on your product classification. Are you offering a wallet, a trading interface, custody? Each of these points you go down a very different regulatory path. Under MiCA, for instance, the obligations for a wallet provider are wildly different than those of an exchange or a token issuer. If you misclassify your product, you might accidentally trigger a full licensing tier. Third, map your readiness honestly. Do you have capital buffer regulators expect? Is there a named compliance lead in your org chart? Can your vendors actually survive an audit? N26, for example, faced major licensing delays because of gaps in their internal compliance systems. They only got over the hurdle after revamping their things end to end. And this isn't rare. One survey found that 93% of fintechs struggle with compliance. Over 86% of them paid more than $50,000 in fines last year, and more than a third paid over $500,000. Compliance is expensive. but non-compliance is a lot worse. Real-world lessons. Let me show you what this looks like on the ground. In Kenya, fintech founders regularly end up in multi-year licensing limbo. The central bank has limited capacity and tons of application. So what do? You get creative. Onafriq, for instance, is only licensed directly in 12 of the 40 countries it operates in across Africa. The rest, it works through licensed partners. Smart move, that saved them years. The UK's Financial Conduct Authority, or FCA for short, has seen a 70% spike in payment license applications. Wait times have doubled. One founder told me they waited 9 months just to get a response, and another 5 months to get a caseworker. In N26, big funding, big name, but they still ran into delays getting their EMI license. Why? Internal compliance, as mentioned, wasn't just up to scratch, especially in customer due diligence. It took a full internal upgrade before they were approved, and also waiting for the right case officer to go to them. The lesson? Money doesn't fix misalignment, and you can't scale what you can't license. If you're serious about getting this right, here's what I suggest. Number 1, start by downloading the Leadership Ripple Checklist. Just write in the comments, I want the checklist, and it'll walk you through the 3 key areas: jurisdiction, product classification, and readiness, along with the compliance pieces regulators are looking for. If you're already building and want a gut check, book a strategic review call. I'll help you align your licensing trajectory and your product goals and investor expectations. And if this saved you months of guesswork, go ahead and hit subscribe. Every week, I drop frameworks just like this to help you launch in regulated markets without losing momentum, trust, or capital. Next up, how to be audit ready as first-time founders. You don't just need a license, you need a roadmap that earns trust from investors and regulators. See you next time.